Now, Check, I think most people are probably very curious in this one question. Where are we in this Bitcoin bull market?
Yeah, absolutely. I mean, it's one of those things. I mean, everyone wants to know, right? When top, when bottom, when buy, when sell. And look, the nature of the beast is, and what I love to say is that no one knows, right? Anyone who tells you that they know is kidding you. What we can do though is get a reasonable gauge and use probabilities, all that shit. Generally speaking, when Bitcoin gets to a new all-time high, which I would say we're kind of flirting with the all-time high because it's the same level, but we haven't really convincingly punched through it. So I generally describe the recovery from a bear market. There's 2023 up till about October, which was very much the recovery. It's only the hodlers. There's no new money coming in. Everyone's still got PTSD that we're going to crash back down again. Like everyone's got bear market goggles on, but we just slowly but surely grind higher. Then we start to move towards the all-time high. And that's like the excitement phase. People start to get a bit hyped up. They start to believe it. I believe this was about October onwards. We broke through about 30K, which was the middle ground. And suddenly everybody goes, oh shit, maybe this isn't actually a bear market rally. Maybe this is the real deal, right? Bit of disbelief starts to fade away. But the phase when you get above all-time high, it usually takes some time. This whole process is like excitement into, not euphoria, not quite euphoria, but enthusiasm, right? People start to really believe this thing's going to go higher. That said, once we get above all-time high, that's where you move into the more euphoric phase. And in terms of market structure, the current cycle we're in is very much what I call quiet and trending. We have this nice rally and then it goes sideways and does nothing. Then it rallies and goes sideways and does nothing. You probably experience it, feels like boredom. Once you get above the all-time high, we move into what I call volatile and trending, where it goes up, but it also comes down quickly. And every single correction, people go, oh shit, that's it, it's over, right? And it feels like it's over, but it then just goes higher again, right? So it's this like much more volatile, more exciting, but we're on the cusp of breaking between those two boundaries yet. We haven't actually gone into euphoria yet.
Kind of feels like it could be close as well. I was looking at some charts the other day and it kind of showed like every time we've, touched that previous all-time high in like 2017 and 2020, like we've consolidated for a long amount of time before we punch through it. And that's kind of like it feels like we're doing today. We're just consolidating at that all-time high. But every time you look at the chart after we definitively punch through that all-time high, it punches quickly and it moves really quickly. And
Yes.
like you say, the volatile period actually begins.
Yes, and strangely enough, Bitcoin trades much more like a commodity. So in the equity world, people when they look at the VIX or the volatility index, everyone panics and gets scared because the market's selling off. So volatility spikes when they have sell-offs, and then when it just goes back to that highly manipulated straight line of just going upwards, there's no volatility. Bitcoin is more like a commodity. It's the other way around. We actually have low volatility during a bear market. And this is the great thing. When people are like, oh, Bitcoin's too volatile, you show them the volatility chart. It's like, yes, volatility happens to the upside. When it's volatile, it means it's going up. It actually gets less volatile during a bear market, which is, a lot of people don't realize that. But also the volatility right now is like a third of what it was in 2017, half of what it was in 2021. And, the drawdowns since the FTX bottom, we haven't given back. It was 20.4% is the deepest correction we've had, which was the one we had at 57K. Like most of the time we get 25, 30, 40, 50, 60% drawdowns. We've tagged 20%. So something underneath this is just quietly and patiently absorbing everything that people are going to sell. It's been quite incredible to watch.
Oh, now that's gonna get a little bit. That could get into some rabbit holes there. Who is that buyer? Who is just sitting there buying? Is it just institutions Check, or do you think there's some bigger
Yeah, I don't
entities?
know. I mean, yeah, look, I think that so one thing that's been very interesting is that we're starting to get more data about the ETFs, and it's primarily retail. And I think this is great because retail has, strangely enough, in every other market, retail is the dumb money, more or less. And that was definitely true. I was retail dumb money in 2017 when I bought the absolute Pico top. Many of you probably listening were there with me, right? Bad decision. Nevertheless, the shrimp really learnt. And when I look at the way that the shrimp behave, they stepped in and bought the all-time high in 2017, right? Just went absolutely ham and bought everything. They then learnt, and I've lived this experience, the education from 2017 to now, the high quality podcasts, the fantastic thinkers who are actually like, people understand what they own now. The next time we saw the same wave of retail shrimp level buying was $20,000, except in the 2022 bear market. So rather than buying the top, they stepped in and bought when the narrative was FTX has just killed Bitcoin for the next decade. That was the story. And the shrimp stepped in and bought. So strangely enough, the retail shrimp are actually smart money, and pretending that they're dumb money is actually a losing strategy. They sold into the 73K top, just the same way that long-term holders did. So the shrimp are actually a smart group, and paying attention to them is powerful, right? And when we see these ETFs are primarily retail driven, the institutions aren't even close yet. We're seeing guys just putting their retirement accounts in, right? Because they believe in this thing. They know what they own. They can see the debasement that's coming. And they're like, well, I've always wanted to get Bitcoin in my retirement fund. Here we go. Or now I can put it in my stock portfolio. Or now I can get my, my father couldn't buy it and hold it via spot. So he's finally gone, yeah, okay, I'll get in via these ETFs. So there is going to be institutional guys that are just sitting there absorbing coins. But at the same time, we're still in the retail phase, which is kind of interesting because we're not at the hype retail phase. We're not speculators. We're talking about hodlers. It's still hodler territory, with a side dish of, early institutions.
So speaking of smart money and dumb money, the Ethereum ETF was looks like it's just been approved recently. What are your thoughts at like maybe a 5,000 foot level of the Ethereum ETF, and what do you expect?
Yeah, absolutely. And strangely enough, actually, yesterday I released a piece which is all about my Ethereum opinion. And the reason why is that I mean, I've gone down the rabbit hole. I've used all the DeFi stuff. It was a great trade for me back in the day. However, it's just not for me. And the more evidence I see about how the project, it's just not my cup of tea. So over time, I mean, I divested following the merge, and that was it. I'm kind of good with it. Nevertheless, I still find it a fascinating mental exercise because what you learn by watching it's like a friend who's always wrong. When you have a friend who keeps making the same stupid mistakes, you're like, God, I really have come to respect the hard design decisions Bitcoin made. And you have to look at the parallels and really get in the weeds. Like, man, you can see why Bitcoin is just a better designed piece of software. So anyway, in terms of the ETFs, big picture, they were always going to happen because Ethereum has the CME futures. So they were always going to happen. I think it's actually a good thing because now Ethereum is on equal ground to Bitcoin. They can't say, oh, look, Bitcoin is, got an ETF and that's why the BTC ratio is going down and blah, blah, blah. So they're now on equal footing. And do I really believe, honestly, that the last 15 years of the market sorting Bitcoin to be completely unchallenged at the top is changed because Ethereum has an ETF? Absolutely not. I would be amazed if Ethereum gets more than 10, 20% of the demand we've seen for Bitcoin. I just don't think that institutions have that kind of buy and hold demand. They like to trade it. They don't like to hold it. Bitcoin is a different animal. So do I think it's going to, is the flippening still a thing? Yes, but probably not for Bitcoin.
So you think Solana is potentially going to flip Ethereum? Is that what you're implying there?
I think that the risk of a flippening is not Bitcoin being flipped. The risk of a flippening is it could be anything. And broadly speaking, when Ethereum went to proof of stake, in my view, they actually gave up their primary, biggest, and most important differentiator, which was proof of work. So if they, in a proof of stake arena, what advantages does Ethereum really have? It doesn't have many, but it does have a lot of technical debt. A lot of these other projects don't have that. And, there's a couple of very technical podcasts I've listened to about the EVM versus the SVM, right? The virtual machine that Ethereum and Solana use. And it kind of clicked to me in this one episode. Basically, Ethereum is always going to be a single core computer. SVM is just one example, but it's a multi-core computer. And the moment that clicked for me, I was like, holy shit, it's really competing against a world of well-funded, lesson-learned technology companies who are going to do what it does better. And when I think about Ethereum's market share, do I see it growing? No, I strictly and quite factually, we're seeing users move, we're seeing capital move, we're seeing stablecoins move. Ethereum's pie is measurably shrinking. And, it doesn't matter how many charts you want to look at, big picture, Ethereum's pie is being eaten into. It's in this very unfortunate position where it's not Bitcoin, and it's also competing with a infinite pool of technology that's going to improve and do what it does better, which is moving around centrally issued assets like stablecoins. So in that regard, does Ethereum need to be as decentralized as it is? Probably not. So here's a strange take. Ethereum is probably too decentralized in the sense that It's not going to be money. And it's tried to be so decentralized that it's actually not optimized for what it's being used for, which is centrally planned financial systems, right? If JP Morgan's going to issue bonds and stocks and stuff, they don't need it to be the most decentralized thing in the world. They just need it to be quick and fast and able to settle shit. They don't need the level of decentralization that Ethereum has made. So in a strange world, it's kind of in the worst of all positions. It's in a valley where it's not Bitcoin, but it's also not the fastest, shitcoin. So it's like, why would you buy it? And I asked this one question. If Ethereum was launched today, would anybody use it? I really struggle to answer in the affirmative for that.
I tend to agree. I certainly wouldn't be that interested in, what Ethereum's done if they launched today. 100%. I think something that a lot of people find interesting is this idea of a power law model. And I've seen
God.
I've seen you talk about this.
You knew you'd get a reaction out of me on this one. Bloody hell.
Let me tee it up for you. What do you reckon? Power law model. You're a fan or no?
Yeah. Okay. So power law model. First things first. It resembles a lot of the pain and anguish that we went through with the stock to flow model. I will give them credit that there's a lot more grounding anchor to it, right? They've actually done a lot more work. The stock to flow model, just for those who aren't aware, is absolute. I can swear on this channel, right? Absolute dog shit. Absolute dog shit. Anybody who supports the stock to flow model, please stop. It's just garbage. There is no, and the worst thing about it, right, is it's been so debunked, and yet the author will continue to pitch it as not debunked. It's like it's been debunked. Now, the power law model has a lot more mathematics behind it, a lot more work going to it. The problem that I have with it is that it's one of these models where markets are not about certainty. There is nothing certain in markets ever. And the fact that this model is being pitched as divine from God certainty is the problem. It's the way this thing is being sold. And the problem is it preys upon people who, what happened with the stock to flow model, people believed it. So what happens is they make life decisions like going levered long at 50K, 60K before a sell off to 29K because they believe that this thing is mathematically preordained to go to infinity. And it's not. It's just not. Markets are too variable. And this claim that it's just divine from God and that it must happen is very dangerous thinking because it's wrong. Like none of us know the future. So it's not the mathematics that's the problem. It's the wrapping and the marketing and the pitch behind it that nothing is certain, and it's going to prey upon very, very new people to this space. It's going to cause the same amount of damage that the stock to flow model did. It doesn't really matter if the stock to flow model was good or bad. It roped a lot of people into a false sense of security because markets are complex and challenging. They're not easy because if they were easy and there was just a model that said we're going to $1 billion, we'd all be a billionaire, but we're not because markets are really, really fucking hard. So that's my concern with it. It's the marketing and the pitch, the claim of certainty. And I think it's, even if it's divine from God and the maths is doing what it's supposed to do, the way you're packaging it up is dangerous.
Yeah, I'm going to be very careful what I say, but I think I agree with everything you just said there, Check. I think a lot of people are going to be looking at these models, and I think a lot of people could make some big mistakes, so to say, if they sell Bitcoin at 120K because it's one standard deviation above the,
Hit a perfect line. Yeah, exactly.
Yeah,
or more importantly, they go levered long at 120 because the people who are going to come in and be the most affected by it are people who come in and believe it at the top. And they look at this straight line projection that basically says, as time continues, Bitcoin go up. And it's just not true, right? We don't know that. So, and again, a lot of people are like, oh, hang on a second, this dude does on-chain data. He's also a voodoo master. It's like, well, kind of, but at the same time, what I'm looking at is the mechanics, right? And what I will be looking for in my analysis is when all those poor, unfortunate souls who, no matter what you do, you can't help them, they will buy high. What I look for is show me when that happens and then price trades below and they all go from happy days, I'm in profit to holy shit, what was that red candle? And they panic. That's bear market material. So that's what I'm looking for is when does that event happen? And I'll see it. I'll be able to watch the damage that any of these models do. And the idea is to essentially be the contrarian and say, well, that doesn't look very good. It's probably time to, if there's going to be a top, it probably looks like that.
Yeah, no, 100% agree. Now, you mentioned it, voodoo data. And I think something that a lot of people think is voodoo data is this idea of the Bitcoin multiplier effect. Now, you made a
Yes.
brilliant video recently on your YouTube channel, which is very, very undersubscribed. So that one will be linked down below. But you're talking about this idea of 118x Bitcoin multiplier effect that's been put out there by Bank of America. I would just love for you to share with the listeners your thoughts about it.
Yeah, it's bollocks. Anybody that says 100x multiplier, 50x multiplier is kidding themselves.
So if you enjoyed that short little highlights reel of my discussion with Checkmate, you're going to love the full interview, which was literally posted only minutes ago over on the bitcoinnews.com YouTube channel. You can click on the link right about there to go and watch that interview. With all that said, thanks for tuning in, guys. I'll see you in the next video.